What's going on, everyone? Today's going to be a video on how to trade ranges. Before we get started, if you enjoy this content, please subscribe to the channel and don't forget to give the video a like. Okay, let's get started on some range trading. So first we need to set the context as to what a range is. A range is a period of consolidation off of a primary high or a primary low, otherwise known as a swing high and a swing low, forming the upper range high, the lower range low, and of course its equilibrium in the middle. And the vice versa is simply just the inverse off of our swing low and up to our swing high, with consolidating price action inside the range between those two highs and lows, which is essentially a buildup of liquidity before the next major leg and in whatever direction that might be. Ranges can take form on low time frame as well as high time frame, where on lower time frame you might see consolidation patterns like this preceding a leg up. This can span minutes, hours, days, and even weeks, and the range will still be valid until either a high or the range low has been broken. Otherwise, it is essentially just a consolidative pattern inside of the range. Now, oftentimes we will get what's called a deviation, where off of our range high or swing high, we get a macro swing low, which will ultimately form that range low. And oftentimes we will see what is a deviation, where price may deviate below the range low and then revert back to the EQ, or vice versa, deviate above the range high and revert back to the EQ. These are really tricky plays as they will often stop people out. But once you've clearly established a range, such as in this example here, it gives you some very clear trigger points or criteria for a trade to the upside or vice versa to the downside, such that you can long from the range low and take it to the equilibrium, knowing there's a high probability that it will reject off of that EQ in the short term, and vice versa, either a rejection at the range high or a rejection at the range low. I like to mark out the quarter quadrants in ranges as well, right here in our upper quarter quadrant and then right here in our lower quarter quadrant. It adds a nice piece of information as to support and resistance levels within this consolidating pattern. And as price starts to regain strength, typically you will not see the lower quarter quadrant break, and then thereafter you'll see a reclaim of the equilibrium and then a reclaim of the upper quarter quadrant before an eventual breakout. Now, one of the hardest parts is when traders get impatient and they incorrectly identify the range low or the range high. Now, in this example, the best way to do that is to wait for that clear market structure break on high time frame. Once we've established a primary local high and we start to put in our correction, you're ultimately waiting for that market structure break. Let's use this area as an example right here. So naturally, when you see this, you'll want to take your range low and put it at these lows. But as you see price continue its correction down, despite there being quite a nice local low here with a significant buyback, clearly price is still putting in that corrective pattern. So as you start to see price violate that range low, we need to wait for that confirmation that the macro low is in, which will establish our range low. So you might refer back to some prior areas of consolidation as a likely bottom out point. But as I said, we need to wait for that confirmation. And that confirmation is a market structure break. And what I mean by that is where the trend is broken, where the prior lower high is broken with a fresh higher high. So in this example, we see that happen right here on this last candle. If we ignore the wicks, we take our last lower high, which was broken by a fresh higher high. We get a retest of that market structure break and then continue the trend up, which ultimately now establishes and confirms our range low. Then price, you will see, start to react with the quarter quadrant and the equilibrium within that consolidation as either temporary resistance or temporary support. And the vice versa to that is if you're coming off of a major low and you're trying to identify the range high, you're waiting for that break in market structure. So we've established our low and we're waiting to identify our range high. So you're waiting for that break and bearish retest of that current trend, where we can now take it from our swing low and bring it up to our swing high, forming our range near the bottom of a sell-off versus forming our range off the highs of a bullish run. Okay, so they're just inverse of each other. Now, in my opinion, one of the best ways of predicting a continuation in a move, either to the upside or to the downside, is a reclaim of the equilibrium or a consolidative pattern near or on the equilibrium, such that if price has consolidated within this range for some time and you start to see a consolidation pattern right underneath the equilibrium here, after we've maintained to the range lows, we've respected the quarter quadrants, and price starts to consolidate at or near that range EQ. This is a really good sign that price is powering up, gaining strength back, and preparing for a next leg up. And confirmation of that from a more conservative standpoint is a reclaim of the EQ, with aggressive buyers being down here here, and more conservative buyers being up here on a reclaim of that EQ. Now, more often than not, what you'll see after a breakout is price start to lead up towards a new range, where essentially it has its lead up, put in a swing high, put in our swing lows, and continue a similar price pattern with potentially a minor deviation below our range low, but not always, where price will consolidate until an ultimate reclaim of that equilibrium, signaling continuation. In extremely bullish markets, there might be quite the gap between the two ranges, the range preceding the following leg and following range, or oftentimes you'll see a cascading of ranges where price will ultimately go from one range to the next in a bit more of a choppy environment. And oftentimes when you see something like this, you'll see price interact with new ranges and potentially react with the prior range. And what I mean by that is essentially leaving those prior ranges on the chart as a reference point as to where price might interact with if the current range low, for example, is lost. Then you're essentially back down into the prior range here because you're within that prior range's high again. So then its equilibrium and its range low become valid again. And so you start to look at that as your next areas where price should respect until that local range is reclaimed again. And essentially we are back inside of that range's parameters. So it's all about identifying which range is the current valid range. Which parameters are we currently trading within? So when you start to see those distribution patterns, either at the range high or at the range low, you need to identify those invalidation points of the range high and the range low. Meaning if the range low is invalidated and it is lost, then it is no longer our local range. And so we would revert back to the prior range by essentially just simply extending out that range to current price action for further consolidation, distribution, whatever it may be, until at such point, as I said, the next range is again reclaimed and becomes our active range to trade within. Okay, let's look at some examples. So in this example, we've got our range high down to our clear range lows. And again, this is in hindsight. So assuming you were able to correctly identify this range off of our high and down to our low and managed this deviation safely, let's say theoretically. Now you'll say to yourself, if I'm trading inside of this range, what am I looking at? Well, as I said, you're trading within the range that's currently valid. So on a macro scale, this might be our macro high time frame range with ranges in those quarter quadrants, okay? From even this high here down to its low, and these highs over here down to their low, forming essentially our quarter quadrant of our overall macro range. Okay, and so you're saying to yourself, when we're trading over here in the blue range, okay, that is the valid range until such time that we reclaim the EQ, signaling strength and potential continuation in the trend until we break above that range high, okay, and then ultimately begin trading inside a cascading new range. Then we start trading within that new range, which we will make green, okay? So now we are trading inside of that range with its swing high and swing lows until it is invalidated. And this one was not able to reclaim that equilibrium with any kind of consolidation that would signal continuation. In fact, it showed weakness near the range low and then invalidated that range low on a candle close below the range low. As these two here are only wicks, we get our first candle close below with a bearish underside retest of that range low if you expand it over. So then now we are back down into the blue range. And what do we see? We see the equilibrium of the blue range very well respected. And in fact, it does not come back down to the range low of the blue range. And instead, we get that consolidation at that macro range EQ, okay, from our overall macro range with a reclaim and very shallow retracements, leaving traders sidelined with no clear dips to take advantage of unless you're on the low time frame. So all in all, it's a bit like trading ranges with inside of ranges or a cascading of ranges, but I find horizontal lines trading crypto are much more powerful than using diagonals and trend lines. Price is all in ranges and they're everywhere and they show you signs if you're able to look for them carefully. Major signs for powerful moves to the upside and signs for the vice versa to the downside. I highly recommend working on range trading, you guys, and I want to thank you for joining today. If you enjoyed this content, please do subscribe to the channel and give the video a like, and we'll see you next time. Peace.